Analyst and CEO at ProShare Nigeria. Femi, good morning.
Good morning.
I guess folks like you will be having a lot of sleepless nights right now, trying to track the markets. 1 week, one trouble. We'll talk about that earlier in the program. The title of that book we read in secondary school, Wilson Tabo, the guy who was at the school hostel, was a student, and he gets into one trouble. It's that he bumped off the chemistry laboratory or did something wrong in the principal's office, always getting into one trouble or the other with the school. That looks like the state of the market right now. This morning, see on the pages of newspapers, Access Bank's dragging AP before Central Bank and says, this company is insolvent, you owe me $35 million in debt. Says, well, I want to collect my money at the current FX dollar rate, 150 per dollar. Says, no, we didn't do that. We did this transaction at 116 naira to the US dollar. It looks like it's still 1 week, one trouble for AP. Let's start from there.
To go back to your analogy, they always say if you want to hide something, you put it in a book. We did publish a book that analyzes the market. The developments, therefore, from my standpoint, from my colleagues, there's nothing new. This market has operated with multiple rules, multiple level playing fields, multiple criteria for handling certain things, that the chaos has just come home to roost. We said it clearly. There's a leadership meltdown within the financial services sector. For why would a 5.1 billion overhead transaction wind up becoming a basis for an insolvency proceedings?
Against African Petroleum.
Simple, because that company probably has been insolvent for quite a long time. And somebody somewhere finally said, let's call it a day. We can keep this going. The problem didn't start today with Access Bank. Started when Musa Al-Faki came out and said there was price manipulation in February 2008. And the Nigerian Stock Exchange, the Nigerian Stock Exchange said no. For some reasons, the Security and Exchange Commission went silent until about early this year, when the same price manipulation came under the February blues again. And so we now had a major problem. Look, Bosun, there are fundamental problems affecting the global economy. We sourced money from outside this economy to bring to Nigeria. We would therefore be impacted by those things. But then we also had a failure in putting in place a program of activities for ourselves to manage this economy and the financial services sector. And so when you find prices declining, and if you catalog the actions taken up to now, you would see where the problems are. First was the denial that it wouldn't affect us. Now is the huge impact of even what the financial market had always felt insulated from, the Niger Delta challenge affecting us in the fact that it affects the revenue of government. Government is the largest spender. Simple economics. It's just very wide open. My take on this is not so much the newspaper story. It's the fact that those who are in charge of managing this market, they do not need the benefit of hindsight to become intelligent overnight. These things are clear. What you are saying is nobody is taking action where it should be taken.
Quite quickly, it looks like no one is in charge. But before we talk about the leadership change, the need for the finance minister to wade into some of this and what is his position on Market Street right now. Look at Intercontinental Bank, the analyst report from Renaissance Capital, talking about the exposure of Intercontinental Bank to the downstream, often all sector, equity, transactions, margin loans, and what have you. What's your take on this write-downs getting a lot more massive? Of course, we had it was 300 billion, I would say about 166 billion. Right now, the Shilling Bank is coming up with very massive figures, almost 50 billion.
I mean, Boston, let's get a bit more serious here. There's no basis for people binding figures all around. There is a body who should say this is how much this is, the CBN. Let's call it a spade. There's no need for conjecture. This is not a political arena. This is a serious business. Take a look at what the Americans did. When they did the stress test, they published it. And they said each bank will have to capitalize by X amount. What is the need for all this drama? What RentCap has done with what was valued up to that very point in time. And I'm sure you see that the target price will have moved further lower by today. Oh, the analysis was spot on. The analysis further confirms certain things we didn't know. Now, you see the figures being mentioned in the RentCap report, and you see the write-downs being done by most institutions today. They are far lower than what you expect the whole market to have. Let us just assume that somehow, we now finally found the Spirit of God within us to release an information to say that the market, the total exposure of the financial services sector to the Nigerian capital market was about 1 trillion. We spent about 6 months trying to come to that figure being confirmed. Now, a rumor is not believed until it has been officially denied. We all know the rules of the game. My concern is this: what is the true figure and what is the state? Because not addressing this gives room for such funny reports like the TR report, the attempt at the marketing which is currently going on right now, where certain individuals are saying this bank is truly not. And we do have examples of people who come to us to say certain things about organization which we know not to be true. This whole era of this noise making creates the distance within the market confidence needed to help us climb out of this struggle. And it goes to confirm what we anticipated, that we're going through a series of denial in this market. We're going through not admitting what should be admitted. We cannot be talking about full disclosure. If you cannot disclose, yes, this was a bad thing which we did not see coming.
You expect the Central Bank of Nigeria to do this.
Exactly.
And not the drama the banks are playing with it on television.
Let me get one thing very straight. The central bank government is not the same as the institution. When you hear people write reports, they say Lamido said this, Lamido said, no. In fact, he has no right to some personal opinions once he becomes a CBN governor. So we take it as whatever he says is that of the CBN governor. Now, he needs to tell me that they have an articulated plan to deal with this rather than the thoughts which is coming out. Because those thoughts will be construed as policy.
And people will take action on those.
Yes.
Okay, let's look at margin loans. You're very strong about margin loans. There's a town hall meeting for next week, Thursday, in which you try to let people understand what margin loans is all about. Are we getting it right or wrong? Briefly.
I do not claim to have a full knowledge, but what I do know is this. In terms of margin loans, it is normally issued by brokerage house, not necessarily the banks. So what you have in this market is a simple loan packaged as a special product. But it's nothing less than any loan you could access in the bank. The terms of engagement were clearly stated there. The one major challenge in all this is that there was no capital emptor issued out. Margin loans were strictly for sophisticated investors who understood that when there was a downside, they will be liable for putting the bank within the what we call a margin maintenance limit and also forfeiting whatever belongs. They may suffer severe hardship. Now, when it became an all-commerce affair, that was where I call the responsibility gap occurring in the market. Now, when you now have this situation, we seem to focus all the discussion on the people who give out the margin loans. We've left out the responsibility aspect of people saying to them, even brokerage firms coming out and say, people come and take margin facility and take some money, buy these stocks. That was irresponsible selling. That went on. If we're going to make a change, we've got to take policy decisions to stop that from occurring again. Then there's the other side of what we do with the books of the company. They have to write it down. They have no choice. It was just a simple business transaction. Those are the rules. When you give a facility of so much out at a financial institution, the core problem you are raising is that where did your risk management go? That means you treat overboard. Because you are collateralizing those exposures on securities which are exposed to the market, which has a risk contingency to it. And so this whole hoopla about what are we doing about margin loan, these people take irresponsible decisions.
The banks
they are not going to give out the facilities. They took irresponsible decisions. They must write those things down, clear their books of toxic assets, and learn the lesson. And so everybody wipes their mouth clean and goes on, and we've all learned. But what did we learn? Is that we didn't have margin loans within the correct definition of the word.
So